Hello, everyone. I am excited about today's lecture. It's on investing in stocks. We'll look at the function of the different stock exchanges. Talk about how to interpret stock quotations, how to execute the purchase and sale of stocks, how to analyze stocks, and how investing in stocks fits into your financial plan. Okay? Stock exchanges are facilities that allow investors to purchase or sell existing stocks. So the New York Stock Exchange is one of the more popular organized exchanges in the United States, and this allows people to buy and trade stocks. If you ever go to New York and have a chance to go to the financial district, it's pretty exciting to see the floor traders. You will see people out there yelling, screaming orders all day as stocks are being traded. Stockbrokers are doing their jobs. It's a pretty exciting place. If you get a chance to visit New York and you can visit the financial district, see if you can just go to the floor where they do the actual stock exchange. It is pretty exciting. Now, there are other stock exchanges. You have the American Stock Exchange, and there are some that are regional exchanges in large U.S. cities. And again, these exchanges allow investors to purchase as well as trade stock. Okay, so a typical stock exchange on the New York Stock Exchange is submitted through a brokerage firm, whether it's Prudential, or Fidelity, or Merrill Lynch, and executed by a specialist. So these brokerage firms have individuals who specialize in buying and trading stock, and it's their job to get the best investment for their different customers. We also have what we call over-the-counter market, an electronic communication network that allows investors to buy or sell securities. So now we have things such as iTrade, eTrade, we have Robinhood. There are several different apps out there that allow you to buy and trade stock. Ameritrade is also one, and I'll share some information about my Ameritrade account a little bit later. But these over-the-counter market does allow you to buy and trade stocks electronically. So no person is needed to perform the exchange. You can do the actual trade exchange yourself. Now, there are price quotations available on the internet that tells you the current trading price for different stocks. That same information you can get from a stockbroker. They're also in different type of financial newspapers. But again, it provides information about the price of each stock over the previous day or recent period. So it'll show you the high price, the low price. It may show you a high for 52 weeks. It shows the low for 52 weeks. So it gives you a lot of information about these different stocks on these different resources. So for example, here we have a stock for the Zoogle company. It shows the 52-week high was about $62. The low was $49. This is showing the volume number of stocks that have been bought, have been traded in terms of hundreds. And so the PE stands for the price earning ratios. That's more of an accounting term. And so this stock closed today at $50. So if you own this share of stock, it's currently selling at $50, and the net change for the stock price increased by 27 cents on this particular day. Okay. Selecting a broker. So again, a lot of time when people want to purchase stocks, they may go to a firm such as Edward Jones, and they're going to have these financial advisors going to serve as brokers. Okay. Typically, they're going to make recommendations to you. Now, be cautious. They may be overly optimistic. They may tell you that, hey, if you buy this stock has a great history. It normally increases about 25%, yada, yada, yada. So they're going to tell you a lot of information. Now, if that broker has stock in the company they're representing, they must disclose that information to you. So that if they're trying to get you to buy a stock and they have ownership in that company, they must tell that information to you. Make sure they're not trying to get you to buy stock just so that it helps them out financially. Okay. Then you have these individual broker skills, meaning that you can do research on these different brokers just to make sure that they're qualified to help you purchase your stock. I'm getting some water. Okay, that was good. Next, commission. Now, of course, a lot of these firms that are going to help you purchase and sell stock, of course, that's their job, and they're going to charge you fees known as brokerage commission. Okay, so with a discount brokerage firm, it's a brokerage firm that executes your desired transaction, but it's not offering investment advice. So if it's a discount brokerage firm, you can go to them and say, hey, I want to buy stock in Apple, Google, Yahoo, etc. And they're going to execute the trade, but they're not going to give you any advice. Okay. If it is a full service brokerage firm, then they're going to offer you investment advice as well as execute the transactions. Okay. So if you go into a brokerage firm, understand if they're a discount brokerage firm or if they're a full service brokerage firm. Okay. Now, of course, Yahoo has everything. You can go to the Yahoo finance sections, click on get quotes. You can put in the stock symbol for any company you're interested in. If you don't know the symbol, just put in their name and do a search, and they'll give you the stock symbol for those different companies. Okay. Now, how do we place an order? So, of course, we've been playing the stock market game since the beginning of the semester, so you have experience in doing this. But when you place an order, the name of the stock, you can either put in the company name or you can put in the actual stock symbol. So, again, if you're buying Amazon stock, you put in the Amazon name, it'll give you the stock symbol, indicate whether you want to buy or sell, indicate the number of shares. So if you want to purchase 100 shares, 10 shares, 15 shares, indicate how many shares you want to purchase. They will tell you the price per share that is selling at currently and the amount of funds required in order to purchase that number of shares of stock in that company. Okay? Now, when you're purchasing shares, you have an option. You can be called a market order or what's known as a limit order. With a market order, you're saying you're going to buy or sell stock at its prevailing market price. So whatever the market price is at that point in time, you're either buying shares at that price or you're selling shares at that price. With a limit order, an order to buy or sell stock only if the price is within the limit that you specify. So let's say with a limit order, you may say that if the stock price goes to $30 a share, I want to sell at that price. So you can indicate that if the stock price goes up to $30, then I want to sell at that point in time. Or you can say if the stock price drops down to $25, I want to purchase at that point in time. So with a limit order, you're going to tell the system or the broker to purchase or sell stock if it reached a specific limit or a specific price. Okay? Stop orders or an order to execute a transaction when the stock price reaches a specified level, a specified form of limit order. So the stop order again, that's an order you're going to put in place that said, hey, once the stock reaches a specified level, I want to go ahead and execute that particular transaction. So your broker can tell you more about these different type of options to do a market order, a limit order, or what's known as a stop order. So when you do a stop order, that's an order for a brokerage firm to buy stock when the price rises to a specified level. Okay? Or it could be for a brokerage firm to sell a stock when the price falls to a specified level. So again, with the stop orders, you tell a brokerage firm when you want to purchase stock or when you want to sell stock based upon a specified level being the actual price. Now, you can also place an order online. meaning you can do it yourself, and there's going to be lower commission for these, sometimes even no commission. So, as I mentioned before, Robinhood has an app that you can use to purchase stock. You can do E-Trade, iTrade, you can do Ameritrade. I actually have a Ameritrade account that I'm going to show you all here. At least I'll go back. Some of the information for the Ameritrade account. If you notice, this is our stock, INO, that I've been investing in our stock market game. And it was showing the price had been about $27.67. I actually purchased the stock at about $12, so it's been pretty good. So again, and with Ameritrade, they actually have 0% commission, and you can do it yourself. So Ameritrade is a great tool that you can use to get into the stock market game. Okay? If you want to know more about how to trade online, you can go to the etrade.com website, and it will give you more information about how to do online trading, transaction costs, and things of that nature. Purchasing and selling stocks. Buying stock on what's called a margin. Okay? So when you're buying stock on a margin, you're purchasing a stock with a portion of the funds borrowed from a brokerage firm. So when you're buying stock on a margin, what you're doing is you're borrowing money from a brokerage firm, and you're pretty much using their money in order to acquire stock. Now, Federal Reserve limits a margin to 50%, meaning that you can only borrow up to 50% of the funds needed from a brokerage firm. You must provide the other 50% in order to acquire those stocks. Okay? What's the margin call? That's a request from the brokerage firm for the investor to increase the cash in the account in order to bring the margin back up to the minimum level. So the brokerage firm may say, well, you have to keep this account, I don't know, maybe $100,000. And so although you spend funds to purchase stock and you borrowed money from them, but they do a margin call, that means you have to put more funds into the actual account in order to keep that minimum balance required by that particular brokerage firm. Technical analysis. The valuation of stocks based on historical price patterns. So you're asking yourself, or you should ask yourself, what should be my strategy when I'm trying to determine which stocks I want to purchase? Well, there's two different types of analysis, or there's more than two. We'll talk about two. What's called technical analysis and fundamental analysis. So the technical analysis, you're looking at the historical price pattern. You're looking at the stock price over a certain time period, maybe over 1 year, 5 year, 10 years, depending upon the history of that company, and try to make a determination, on the stock. So have the stock reach its highest price or not, or is it in the middle somewhere? So you're trying to make a decision on buying stock based upon the history of the stock price. With a fundamental analysis, you're now looking at the stock based upon things such as the company's revenue or earnings over a certain period of time, as well as their financial performance and their economic conditions. So now you're looking at not just the stock price, but you look at the company's annual report. You look at their revenues and their expenses over a certain time period. You're looking at their net income or their net loss. You're looking at their balance sheet. You look at their statement of cash flows. And you're going to make a decision about this company to buy stock in that company based upon their overall financial health. This is very important, people, that you take the time to investigate these companies before you decide to invest your money in them. I recommend that you do not only a technical analysis, but also a fundamental analysis looking at the overall financial health of that particular company. Okay? That will conclude our first portion of our Chapter 15 lecture. Stay tuned for Part 2.